All right, what's up, everyone? Hope you're doing well. Let's do a quick breakdown of today's action because I haven't took three trades in one single day since like a lot of time. So it was a pretty crazy day. Um, so once we woke up, apart from those candles, our chart looked like this. All right, so we had our two trend lines on the 1 hour. So this big one that we start from there that was respected. So one second touch, then the third touch, fourth touch, then broke down. And yesterday we went and got right back up of this major trend line. So tells us that this particular move was most likely some kind of liquidity grab, fake out to the downside. So then people will think that price should go further down. So everyone was shorting there, and everyone got fucked up on the way up. All right. So once price decided to get back up of not only this one but also this one, so we didn't even made a third touch of this one. We simply just went straight through it, went straight through the moving average on the 1 hour and even on the 4 hour. So it tells us that the bullishness of gold right now is pretty high. All right. So what we wanted now was simply a retest of this short zone. So yesterday this was some kind of short zone right there. So we had our buy zone right there, happened overnight. So not much we can do besides waiting for a valid retracement to jump back in. All right. So let's go to the 15 minutes to see what we were playing with this morning. So this was the structure we had this morning. So this was the news at 8:15. Since there was a news at 8:15, I wasn't interested in taking a trade before that. So I was waiting until at least 8:30 before placing a trade. So we had the initial push right there. What we can do is simply look for short zones from this impulse to that. So we place our fib from the high to the low, so like that. Then what we have is this major 78 plus 88 zone, so right there. So usually it would place your zone like that, right on the 78. But as you can see, market reacted a bit before. Why did it react a bit before? Simply because if you go to the left, we had this high right there, all right? So most of the time, you can see a high like this one. When it gets broken up, or if it was a low, same thing. When it gets broken up, and then price just stay a bit above and then goes below and made some kind of structure right there. When we go retest that particular level, so in this case this one, we'll see a continuation to the downside, since this eye right there was purely some liquidity grab or manipulation. You can call it whatever you want. So once we have the retest of the zone, so you had the zone, we tested it one time, but price decided to go grab some liquidity above, since a lot of people probably shorted the double top and put their stop loss right there or there. And then once price retested it a second time, usually the reactions are quick. So what I did was I placed my zone just a bit below the 78 fib to go touch that low right there. So as you can see in the updates, I put my box from this top right there, so y'all can see why I decided to put it there. So once price decided to go touch it, simple, you put yourself on the 5 minutes. Now as you can see, we had the first reaction right there, but that was basically on the news, so I'm not interested in doing that. Also, there was no structure there, but a couple of minutes later, price decided to come back up to test this zone again. Now this zone, I would have separated it in like two. So first of all, you had this plus the 78, which was right there, and then if price would have continued moving up, I would have this second 88. I would have waited for a structure on the 88. So what I did right there, pretty simple. I mean, when we have a huge push like that, since the news was negative for the USD, gold reacts on the opposite of the DXY. So if DXY goes down on the news, gold will push up. So it was kind of a risky setup to take, but when you see a big strong move like that, and then we retrace like this one, structure usually is valid. If it was, let's say, the NFP, probably wouldn't have shorted this one, but that one was like, it's not real NFP. It's like the NFP data that goes out on the Monday, Tuesday, Wednesday is usually like a preview of what's going to happen in the NFP, but the real move from NFP is not gonna happen on the Wednesday, right? It's gonna happen on the Friday, or in this case, this week is gonna be on Thursday. So there were a lot of odds that price is gonna, let's say, at least just consolidate until the NFP tomorrow, or just at least reverse a bit and then continue moving up. But in my head, it was a decent short to take because of that. So once the 5 minute right there closed like that, on my C-Trader, it closed a bit in red, so it closed a bit there. On this Owanda chart, it was maybe a bit harder to see, but once we grabbed the liquidity from that eye right there, closed right inside, I just waited for a bit of downside from this candle. I would have preferred for the candle to just do something like boom and then drop, but in this case didn't make an upper wick. I just waited for the price to break that low right there, and then once we had some small retracement around here, I simply entered on the 5 minute with my stop loss right above this zone. So it was 20 something, 23, around 23 I think was the stop loss, and then I had to find a take profit, but also some potential buy zones.